Hello, good afternoon, everyone. So my name is Bojan Nastav, and today we will look at the tax and commercial illicit financial flows, or IFFs, and the methods for their measurement. There are a few things we can say about the IFFs, obviously. Let me just get the screen moving. Yes, okay. So first of all, the IFFs are important within the 2030 development agenda. Specifically, we have the indicator 1641, so total value of inward and outward illicit financial flows is set to measure these flows and inform policymakers how related target 16.4 is achieved. Second, two agencies, namely UNCTAD and UNODC, have been assigned as custodians of this indicator, which means that they were tasked with the answering of the two questions. So what are IFFs, number one, and number two, how to measure them? To that end, custodians have set up the statistical task force composed of various international agencies and national institutions, such as the national statistical offices or the tax or custom authorities. Now, based on the common work, UNCTAD and UNODC published in 2020 the conceptual framework for the statistical measurement of illicit financial flows, reflecting concepts and standards that have been approved by the Interagency and Expert Group on the SDGs and the United Nations Statistical Commission. In 2021, the custodian agencies finalized methodological guidelines for the measurement of the IFFs in country pilots. Now, the conceptual framework defines IFFs as financial flows that are illicit in either origin, transfer, or use, that reflect an exchange of value and that cross country borders. This specifically is important for the measurement part. Now, four categories of IFFs are identified. Namely, as we can see, so we have the illicit tax and commercial practices, we have illegal markets, corruption, and exploitation type and terrorism financing. Whereas with the last three, the question of illegality is clear. So all these are illegal activities. With illicit tax and commercial IFFs, the situation is rather more complicated. As we can see, illicit tax and commercial IFFs are essentially broken down into two. One, illegal tax and commercial practices. Examples here are like tariff, duty, or revenue offenses, tax evasion, and so on. Often these are the part of the non-observed or the hidden or even the shadow economy. Now, the second part of the illicit tax and commercial IFFs is so-called aggressive tax avoidance. Hiding or shifting profits, like through manipulation of transfer pricing, strategic location of debt or assets or intellectual property, tax treaty shopping. So these are all examples of aggressive tax avoidance. What is important here is that these can be part of legal business transactions. Now, while tax avoidance is legal, aggressive tax avoidance can be detrimental to sustainable development and is therefore included in the SDG indicator as an IFF. Now, official statistics cannot be based on legality, as national tax laws differ and also change, and therefore the indicator is based on the activities that may generate illicit financial flows. The boundary between legal, illegal, and illicit tax practices is somewhat unclear, and therefore a continuum of activities between legal tax planning or tax avoidance all the way to illegal tax evasion. So this continuum is called the aggressive tax avoidance or the aggressive tax planning. All of this can be used for the measurement of the IFFs. Various methods to measure the IFFs have been proposed and applied in research. Now, even though these methods all strive to estimate the size of the IFFs, research or econometric approach and statistical approaches are markedly different. Now, statistical approaches tend to rely more on the so-called bottom-up or direct measurement of IFFs, which may be important for reliability or political buy-in in our case. Typically, also, statistical authorities have access to more detailed data for the analysis than the researchers. It is also important that there are the IFF methodologies that can be integrated with existing statistical frameworks, such as the system of national accounts or the balance of payments. Now, although various systems in the countries will differ, like the statistical system or administrative or even taxation system, it is important that as much as possible, countries can apply comparable methodologies that are comprehensive and fully consistent with the conceptual frameworks. In the guidelines for the measurement of IFFs, selection of suggested methods is based on an assessment of these methodologies with respect to three groups of criteria. So the first one is the soundness of methodology. Here we have criteria like clarity of concept or transferability or capacity requirements. Then we have the source data, so criteria looking into the availability or coverage or even granularity. And last, but definitely not least, is the quality of results, which refers to the relevance for use or the clarity or coherence, to list just a few of the criteria. The guidelines link activities that generate tax and commercial IFFs to measurement methodologies. Now, in the conceptual part, activities are discussed in more details. Here we depict only the three main groups or the three main types of the tax and commercial IFFs. So we have the trade misinvoicing, we have profit shifting, and then we also have the flows of undeclared offshore wealth and related tax evasion by individuals. As you can see, we have identified two alternative methods for each of those types of the tax and commercial IFFs. Specifically, we propose to have a pair of methods for each of the type. So two different methods with respect to the data requirements or the statistical capacity requirements to account for varying national circumstances and statistical capacities. So for the trade misinvoicing, we have the partner country method, which reviews bilateral discrepancies in reported trade flows. We have the price filter method that builds on identifying abnormally priced transactions to identifying the signs of the IFFs. For the profit shifting, we have method number 3 that looks at the distribution of profits among the M&E group, so within its units, relating it to the corporate effective tax rates and underlying economic activity of a particular unit. Method number 4 compares units that belong to an M&E to a comparable non-M&E or a domestic unit to identify potentially tax avoiding behaviors. For the flows of the offshore wealth, method number 5 looks at the undeclared offshore assets, compares what has been declared by citizens of country A and what international reported data say about the assets held abroad by citizens of country A. Method number 6 starts from a global level imbalance between international portfolio liabilities and assets, and then breaks this down to a country of ownership and using various assumptions to finally arrive at the flows of the IFFs. Now, UNCTAD guidelines provide a suite of methods for pilot testing to allow national statistical authorities to select and adapt methodologies to their national circumstances with respect to nationally relevant types of the IFFs, data availability, and statistical capacity. Moreover, guidelines provide additional tools and resources for national authorities to undertake national statistical measurement of tax and commercial IFFs. It will be useful to have many countries test the measurement of IFFs that affect their economies. Estimating IFFs will not only provide clarity on the scope of the IFFs, but also help improve the quality of key macroeconomic statistics, such as the GDP. Now, UNCTAD and UNODC, jointly with the regional commissions, are supporting countries in the pilot testing. With this, thank you very much and have a wonderful day.